We are moving on to our next session of the day. This session is avoiding legal pitfalls, common mistakes to avoid when starting and running a startup. We have some really awesome panelists that are going to share with you, their best guidance, best advice for how to keep your startup on the right path. And with that, I'd like to bring up, and I'm going to do my best with the names, but Christy Albulero, Richard Duelo-Feo, Derek Ruth, and again, Ryan Carpenter.
Can't hear you, Ryan.
I think you're on mute, Ryan.
I am on mute. Good morning. Why don't we go around and do a quick introduction? So I'm with you, Christy.
I'm Christy Albulero. I am the co-founder and COO of Iingo, and we are a tax and accounting software and services company, a hybrid of the technology side, but understanding that technology can't solve anything when it comes to everything when it comes to tax and accounting. So we build our own technology to make our process more efficient by 46%, which allows us to really focus on the specific needs of our startup clients.
Richard.
Sure. Thanks for having me, Ryan. My name is Richard Duelo-Feo. I work with Trust Ventures, an early stage venture fund here in Austin. We invest in companies that need policy and regulatory help in order to thrive in the market. Everything from difficult compliance questions to more thorny issues such as cryptocurrency approvals, as well as energy approvals, insurtech, food, legal tech, you name it. We've probably seen some amount of it.
Great. And Derek.
Derek Ruth, CEO of Catena Technology. We're an early stage context startup building business productivity and collaboration tools for the AEC industry.
Excellent. So welcome. We've got a great participant. So the topics that we're going to talk about were the legal pitfalls, but we don't necessarily want to scope them in terms of legal, but in terms of perhaps best practice. And it's interesting that you come from all different perspectives. Derek, I know that your company, for example, is relatively early stage, but you've just raised. So I think that you come from a different perspective in the sense of not only your current position, but also your background in terms of other startups that you've used. And then Richard as well, you come from a venture capital perspective, what you're looking for in your portfolio companies. And then Christy as well, you've also early stage startups. So I'd be interested to hear from each of you kind of preliminary thoughts on, maybe the top 2 or 3 best practices early stage that founders and startups could take to avoid significant roadblocks down the road.
I'm happy to kick it off.
Okay.
From my perspective, when it comes to some regulatory things, one of the things that gets left or forgotten about is taxes. And even though most startups are pre-revenue, if you're raising capital, then you're probably a C Corp, and you're going to want to take advantage of the tax law that exists, that as you're creating all of these expenses, which creates a loss, you get to carry that forward to future years so that when you do become profitable, for a while there, you get to offset those profits with those prior losses, which saves you a ton of, thousands of dollars on taxes. And leading up to the taxes, you have to have your accounting in order. That doesn't necessarily mean that, you have to go pay thousands of dollars to a CPA. I think a lot of startups, do get caught in that, where they think they need a CPA right away. If your expenses are simple, try taking it on yourself. Or try finding someone who will partner with you, understanding that you are a startup, you are pre-revenue, and that you don't necessarily have thousands of dollars to spend on a CPA because you're focused on, using that money to grow your business.
Yeah. Christy, you probably encountered this as well, but professional services like legal, like accounting, they cost money, right? And with a startup, money's tight often. So when do you recommend that a startup or an entrepreneur engage an accountant or financial assistance?
It depends. I kind of think about it in terms of what part of the year you're starting up your business.
Yeah.
You don't want to wait till the end, but if you are starting your business up at the end of the year, you might want to go ahead and try to engage someone, because that, even if you're 3 months operating, that's still a tax return that you have to file come the very next year. Also, there are some, if you are a company that is involved with research and development type of activities, there are credits that you can claim, even though you're pre-revenue, to offset some payroll taxes, which again can save thousands of dollars.
Right. Derek, in terms of where you're positioned currently, you've recently raised, and so tell us about that experience and perhaps what worked best and perhaps what you may have done slightly differently.
So I mean, the experience of going through that funding and legal sort of handshake of bringing on a funding partner is always sort of interesting, and it's kind of a give and take of making sure that you have the funds to run your business, but also make sure that you're jointly sort of understanding the controls in place. That's always been sort of a big legal pitfall for me, or a pitfall in general, is sort of understanding that in the end of the day, you may have a product that you're super excited about, or an idea or a venture that you're starting, but you're starting a business first and foremost, and it has to be a business that makes money and is investable and the rest, and making sure that those things are not left later is really important, because I think a lot of people get into this and they're super excited about an idea and don't realize that idea needs structure and foundation in order to flourish. And that's always been sort of something for me that I always, later on is kind of this thing of, did we spend enough time doing that part of it? And that's something that I've learned to sort of spend more time on early. So given this process that I just went through, it was certainly something that we made sure to spend time getting right. So you don't have to worry about those things when you're in the heat of trying to build a product and sell to people and find your customer and product market fit and the rest. You want to be having the time to concentrate on that.
Yeah, I see that a lot. Where founders are so focused, laser beam focused on the product, that they forget about the structural side of the business and growing the business as well. So that's interesting. Richard, what do you typically look for, and what do you see in your portfolio companies? Both that impress you, but also any recurring issues that you see that cause pause?
Yeah, I mean, I would say that it's to get on top of your policy. I think to the extent that, for instance, and I think early founders and young founders having conversation on cap table positions.
Yeah.
Founders, bad idea, in my view. I mean, it's just kind of taking a very important can on the road to an area of conversation that could cause real serious disruptions to the business when it's supposed to be up and running, and you have more serious concerns such as raising funds, right? Like, you don't want to have both those conversations going on simultaneously. You certainly don't want to show that level of ambiguity to an investor base. I think those types of things, getting on top of issues quickly. I know it costs funds to bring on a lawyer, but fortunately, we're in a position today where there is this robust cottage industry of lawyers who can help you tackle basic documentation and get basic stuff together is what you really need. You don't need to hire the best law firm in the country to help you do that. There are standard documentation and principles that I think the industry has done a good job building out. So use those, but definitely be willing to put in that initial work, because it can pay dividends.
What do you like to see, particularly? What would you like to see for a potential portfolio company coming to you? What would be the ideal presentation, not from a pitch perspective, but from a belts and suspenders?
Yeah, absolutely. So clean cap table, I think that's absolutely critical. We don't expect you to have everything, right? I mean, Am I expecting you to have an overview of your IP? No. I do expect you to have a view of what is patentable and what do you think is the right approach to that, so that you have an intelligent view and perspective on that, so that we can get on the same page. Similarly, if you're in an industry with heavy levels of compliance, I do expect you to have some view of what those hurdles might look like. You might not know the 50-state survey, and no one is expecting that. However, you should know, at least generally speaking, what's it going to take to get, say, if you're a financial services technology company, a banking partner. What do you need to prove on the AML KYC side? Are you ready to handle those conversations? And then similarly, like if you're in telehealth, just knowing where you can and can't push your product, particularly if you have certain functionality and features that you're really highlighting, and understanding, where is that roadmap going to lead you? Because those are critical to my view of if we're going to give you dollars, can you ultimately achieve the type of rollout that you're promising, right? So making sure that your pitch is well structured with the compliance requirements that you're willing to take on.
Yeah, that's helpful. And I know that, in the previous session, I mentioned that we were going to talk around the cap table, and I know that there's a few questions around that. So I'm interested to hear from each of you, because again, you come from different perspectives as to what the best practice is in terms of setting up and maintaining the cap table. Because what I've seen, at least in my practice, is that number one, it's in the eye of the beholder in terms of how they structure and present the cap table. But number two, and more recurring, is that it's after the fact, and they're trying to reconcile in anticipation of trying to raise, and they may have entered into like a vesting schedule with co-founders or key employees, and now they're trying to figure out, how do we walk this back, or not necessarily walk it back, but how do we outline it in a clear and discernible way that someone like yourself would be interested in seeing. So, Christy, what do you recommend from setting up the cap table and maintaining it?
My recommendation is that as you have money coming in, that you are updating at that time while it's still fresh, and it's, it doesn't take a long time to do it. It's just a matter of being disciplined to just, to do it. And then, as you reconcile monthly, it's, if you've got or not monthly, but, at the end of the year, if you've got those who have a vesting schedule that you, or if you're working with an accountant or someone is helping you get that up to date, somewhat, I think monthly might be too much, but at least on an annual basis. But again, as you get that money and just at that time, making those updates, because it falls off your plate, you're going to forget. And then when you really need it, you're scrambling, trying to put it together. Yeah.
And Chrissy, if I can jump off that point, one way to do that is through your 409A valuations, right? I mean, so you should have at least a lever. And I do feel that there are many startups that I've seen who have just completely punted that, thinking it's not something they need to worry about until the fundraise. But if you offer an equity grant right before a fundraise at par value, that's a problem, right? And so you do need to kind of have that sense of, there's this timing within the tax code. It's built to help you make sure that you don't have these sticky situations within your cap table and within tax consequences. Use it. I think that can actually be your friend.
Yeah. What about you, Derek, in terms of just, from a CEO, startup founder perspective, how do you typically manage your cap table?
So, I mean, there's obviously lots of tools out there to help, with the physical management of the cap table and keeping it up to date and structured, and make sure all your certificates are managed and the rest. Making sure that you're keeping things sort of down the middle of the road, from not only the grant perspective, who's getting the equity, but also from a fundraising perspective, to make sure you're not making any sort of exotic plan that someone has to come in and unroll. It really then goes back to, sort of the concepts of, building a business. You want to make sure that you're not trying to recreate the wheel. There's tons of different resources out there. I know there's a question that came in about mine, that, whether or not we had legal support. We did have the opportunity of working with some legal that helped us through it. I think there's certainly a lot of different people and organizations and resources out there to help people kind of deal with these challenges, because people have been through this before. And I think, utilizing other people's experiences and coming to events like this, and talking to friends and find those resources and those opportunities to learn what makes things clean and what makes things easy for you down the road.
Yeah, that's really important. I'm also interested to hear from each of you around what should comprise of the cap table, right? Because there are the core essentials, but then it really depends on sometimes who's preparing it. So from each of you, what do you like to see, or what do you like to include that would convey, the message? Richard, why don't we start with you?
Yeah, it's a really good question. I think there are obviously some basics. I mean, from the investor perspective, it's always good to make sure that you have all the major investors listed. I mean, obviously, there's going to be some level of ambiguity sometimes on who's actually going to participate, et cetera. I always prefer to keep it up to date, and to the extent that you have a rolling close situation or something of that nature, update your investor base so they're aware of what's going on, and you can continue to adjust your allocations accordingly. I think that's the kind of the fast-pacedness of the investment process. You're constantly getting these commitments, and it's good to keep that level of understanding of what do you have left on the allocation and who's going to take it if potentially there is any structuring, so you can ultimately hit the raised amount that you want with the investors that you're wanting to do this with, and having those conversations up front and early. From the perspective of like the Excel itself, I don't think there's a one size fits all. I've seen a lot of different things that make sense for different situations. For instance, if you have a potential cash out event in the foreseeable future, maybe it makes sense to have a waterfall analysis based on what might be occurring on certain types of exit situations. I've seen that attached in situations where I think it makes a ton of sense, and then other times it's just a completely unnecessary exercise. And so a lot of those types of things I think are actually situationally dependent.
Yeah, Christy, what are your thoughts on this?
I think that as long as you're showing, I agree with Richard. If you're showing the allocation of everything, I think dates are important to kind of understand that level of detail of when, people came into it. What price point is also important for books purposes and, at time of exit.
Derek.
Yeah, I mean, I agree with all that. I think the biggest thing from from the inside, it's making sure you're doing the work as it happens. Coming back and trying to remember is always difficult. So keeping it up to date and making sure that it's not something that you push to the side. Again, I like to use tools out there to keep it tracked. I find it effective for me. Don't have to recreate the wheel every time.
Derek, do you have any recommendations?
I've used CapTable.io. I've used Carta. I mean, I've used a few.
What about Christy or Richard? Are there any tools that you've seen that are?
I think Derek just listed like the top two most common ones.
I mean, there is some benefit to using something that everyone already understands and knows how to utilize. And they work. People have a relatively good experience with them. It doesn't capture necessarily everything. So I think Christy made a really good point with dates. If you have a bunch of notes, for instance, and they came in at different valuation caps, you should date them, right? Because the investor's going to ask about it. And ultimately, it just helps everyone understand a little bit better about what the actual valuation series and timeline has looked like, and what's that level of interest in each of the parties, and what's the story, right? At the same time, a cap table is both an understanding of where everybody is today and what historically has happened up to now. So having that same level of insight is important.
Got it. I'd like to pivot a little bit now and talk around seeking funding and timing. Because it's always a question as to when the appropriate time is to bring investors in. And so I'm curious from each of you to hear what your thoughts are. And it does depend a lot on the company and the product, of course, but there must be some recurring themes and situations that merit bringing in a third-party investor, or conversely, kind of bootstrapping it and doing it organically, and what that balance is.
So I think that in terms of fundraising, even if you think you're starting out with, you're going to bootstrap it, you never know when down the road that's going to change. And for one, the process of getting any kind of VC money is going to be a long process. And before you even want to talk to them, you're going to want to know your numbers because they're going to ask you about them. And so I think that no matter what your situation is, that it is important to have your books in order, to be up to date on your tax returns, because you don't want to find yourself in the situation where you're wanting to find money, fund your business, and now you have to wait till you get a year's worth of finances in order, and then, or you're trying to form a partnership and they want to see your past tax returns, but you don't have that, and so you're scrambling to get all of that, and you're likely to make mistakes because you're going to forget stuff because you haven't been keeping up with it. So I think it's just something that you have to, from the start, you just want to try to keep up to date. If it's 30 minutes a month that you're spending on your books, you'll save yourself hours and hours later.
Richard, what are your thoughts?
Christy, I think nailed it. I think it's really a question of staying on top of it from when you know that you're going to potentially go out to market. And this just goes with the broader trend of it's probably going to take you longer to fundraise than you think it's going to take you. So build in the time appropriately. And that goes with the deck. It goes with introductions. It goes with everything. The second you start your deck, you should be putting together your financials. That doesn't mean you should have all your documentation on the financing ready to go, but it does mean you should have your cap table prepared and all those pieces that essentially will happen, assuming success. Those are the things that you really want. And so having that conversation and having a good lead time to that is important, because documentation can take a long time. I think people don't quite appreciate often when they're on their first fundraise just how much effort you have to put in to make sure that the business is something intelligible to another person, right? You're in it so long that you think, well, of course, it makes sense to me, but you have to get someone who's never seen it before to not just understand it, but get really excited about it and view that all the pieces are there and are working appropriately. So,
can you elaborate a little bit on what that timeline looks like and what it's comprised of, at least from your perspective?
Gosh, I mean, it's so flexible depending on the company. I mean, they're especially, when you have an accelerator, for instance, like Capital Factory, they'll help you in a lot of ways so you can get through some of the harder stuff earlier. If you're coming completely outside, let's say, the traditional tech network, and you don't have as much experience with tax, with finances, with finding the right lawyer, it could take you months, and so you have to assume. I always say, like, you should assume the worst, and then if you can raise the funds earlier, fantastic. But that way, you're at least you want to be at the point where you have really interested investors earlier on that are excited about your metrics. And, it doesn't hurt just to start the conversation early and just keep them posted. Actually, some of the best things you can do is ultimately get to the point where you are ready to fundraise and you are actually just sending along updates at some point because you just think that you need a little bit more time, and you just get people more excited, assuming the business is moving in the right direction, right? And keeping those metrics and those financials in particular, when you prepare them up to date and updated and with continuous growth, that's gonna look good. I think it's oftentimes a missed opportunity. The update is something investors want to see. We do read them, so you might as well send them.
Yeah, no, that's great. That's great tip. And Derek, you're uniquely positioned in the sense that you've just done it. So what was that process? Yeah.
I don't think there's any one size fits all with when you're ready to raise money or bring money in. I think it depends upon the situation that you're in. I've gone through bootstrap situations through, all the way to commercialization. The particular situation that we're in, we went through an incubation with Stanley X, a venture arm of Stanley Black & Decker. So we were in a little bit of a different situation, and we were sort of doing trying to find a challenge and a solution that sort of geared toward their particular set of investment opportunities. So, and then there's other opportunities that you really have an idea and it doesn't require a lot of capital heavy. So you really want to try to de-risk and make sure you're seeing if there's any product market fit before you're going out to any investor. I mean, ultimately the goal is to see if there is a there. And anything you can do to try to de-risk that and understanding that you have something that someone wants, you're just going to get, that conversation is going to be easier. It's always that conversation, someone's going to give you money when you don't need it. because you've kind of de-risked it enough to make it a slam dunk, because everyone wants to make sure things. It's all about sure things.
It's all about the sure things, right? For sure. Hey, we've got a couple of questions, so I want to try and do this in real time, just so we capture it. And so the first question is regarding the cap table. What are your perspectives on Carta and captable.io? I'll just throw it out there for the group.
I mean, I'll kick it off since I threw those names out there. I'll tell you, I don't have a personal preference between the two. As long as it does my job for me without me having to spend a lot of time on it, that's the biggest thing. In this particular sense, I was sort of leaned to a place, in that I was working with somebody that had a relationship with one of the products. I don't want to give a plug, because I'm not endorsing any one or the other. For me, it's just what's easy, what gets it done, what allows me to have the time I need to do to actually concentrate on the business itself. They both work.
Yeah, I would agree with Derek. It's about finding the solution that you find easy to use. With any application, there's multiple out there, and it's the one that you find the easiest. You'll find 10 people that prefer this application and 10 people that prefer the other application. It's just a matter of preference, and finding one that meets your price point. You obviously don't want to spend hundreds of dollars on a cap table application either. So if you're able to find one that, gets the job done for less money, I say go for it.
Yeah, I think Eric and Lucy basically covered it. I mean, I will say the only thing I wouldn't do is go for a service that's going to be difficult to use and understand. So as long as you're outside of that universe, and I think that's actually a very small subset of software that's really tackled towards this problem, you're probably fine.
Great. The second question we got is actually for you, Richard. It said that you briefly mentioned IP, but what are you looking to see before making funding decisions? And as a follow-on, do you want to see that provisionals have already been filed, or competitor or landscape analysis? What do you see?
Yeah, I mean, IP is a thorny question because it really depends on the company. I mean, there are some situations where IP doesn't matter at all effectively to the defensibility and go-to-market strategy of the company, and sometimes it matters a lot, right? And so you have to frame it accordingly. I mean, there is, again, no one-size-fits-all for these types of things, and it also depends on what you're raising. If you're raising a pre-seed round, I'm not expecting you to have a provisional patent filed per se. And even if you are further along in your IP strategy, it's more important to have a sense of when is it important to file the IP and what the timing for that looks like, such that you're filing in a timely manner, and you're going to be able to receive all your patents fine and make the most use out of it. That said, it does not necessarily have to happen immediately. And certainly there's a conversation that needs to happen about what is the right budget, right, for IP and for filings, and what's that going to look like. If it's an absolutely essential piece of the business,
yeah,
and in that case, I think it's definitely important to at least have a timeline on this is what we're going to do, and this is how we're going to file at least our core patents, and what do those mean? Like, what are we talking about there? Is it a utility patent, a process patent, whatever? And more importantly, if there are other companies doing this, like I think we see this a lot in battery technology, for instance. There's quite a bit of IP around in the space generally. I think it's important to have a competitor analysis, but not just as like an IP standpoint, but really just as a matter of how much better are we talking about, right? This is just like, is it valuable having a competitor analysis generally? If there are technical validations that are important around the IP that you can also tie into the protection, then I think it makes sense to have that in your deck, probably in the appendix is my guess. But like, it's not necessarily, really the core of the business should be, why is this service that you're providing so important that people are going to want to use it? Right? I mean, it doesn't matter if you have a patent. It's about selling whatever the patent is ultimately pushing forward, right?
Yeah, just sharing the message.
Exactly.
Right?
Exactly.
Yeah. Derek, in terms of your experience, how did you prepare for those initial discussions with investors, and what was their feedback?
So, I mean, you want to make sure you're not building in a vacuum. I mean, I think we all think we have this great idea, and we're convinced no one's ever done it, and it's the best thing that's ever happened. And I think it's, it may be one of the greatest pitfalls in a startup is thinking you're the smartest person out there. You need to do your research. You need to make sure where you fit in the landscape. You need to make sure someone hasn't done it before, and if they have done it before, what gives you that competitive advantage? What separates you? And wrapped in that is their IP to be made. It is what becomes defensible. It's what makes sure someone else, just like you, doesn't come behind you thinking the exact same thing that you did. And when you go and start talking to investors, they're going to expect that you've done this work. They're going to expect that you know more about your product and this in your industry and your vertical than they do. And they're often really smart people that spend a lot of time understanding what they're investing in. And if you're not prepared, you'll be exposed pretty fast. So going through that IP investigation and conversation and what it's required, is it something that IP can be created from, is just something that it needs to be something you're thinking about, every step of the way.
Yeah, that makes sense. So we have another question, is how and where can we find pre-seed early stage startups, legal advice, creating initial contracts with partners and other operational concerns? Right here. But I think in terms of engaging lawyers, I would say this, meet with a few, because some are very niche in terms of their application, but also, talk to them around what your business model is, and talk to them around what your technology is and what direction you're heading, and make sure that they understand from a business standpoint what that looks like and what your milestones are. Often there are some attorneys who are very transactional based or very caught up in what they do and don't really give enough context, in my opinion, to the business side of things. And so having an attorney that's well versed in both will serve you well. But I do encourage anyone, clients, to shop around, in the sense that talk to 2 or 3 different attorneys, make sure there's a good rapport, and particularly with startups, you need quick response. You need a partner, and we really pride ourselves on doing that. But it's really about the rapport and them understanding your roadmap and your vision and the business and the industry. And also referrals. Referrals are key for us. For example, we get a lot of referrals because it's a community, and when you partner with people, they tell us. But I'm curious, from just taking a step back and away from the legal assistance per se, but in terms of professional services, from a startup perspective, what do you suggest in terms of looping in appropriate support and professional services, and how have you found that people have done that? Derek, why don't we start with you?
I think it depends upon what level you're in. If you're super early and you're bootstrapped, you're going to want to try to do everything you can to beg, borrow, steal, get friends, get favors to get all of that stuff accomplished. As you start to raise money, your money wants you to move forward on making sure you can commercialize your product and get it to market, and make sure you're giving them a return. So those services, you don't want to have that capitalize all your time. You're going to want to then go find partners and to be able to offload a lot of that work from your day to day. So it just really depends, and it's all about cash management and understanding what you can do for the cheapest amount, and then making sure to offload that to smarter people in the room when you can.
Yeah, I'd agree with all that Derek mentioned. I do think it's a really good question of how do you tackle those initial contracts and relationships. You want to be careful about the material provisions you're entering into early, and making sure that those will grow with you okay, and making sure they're industry standard or close to them, so that you're not walking into something that's so unusual. One of the best places out actually to do this is talk to other companies and founders that you know in the same industry. I mean, particularly on the startup side, I do think there really is a sense of, I've been there, I know what you're going through, I will at least grant you my time and can refer you to some people who actually did help me think through these problems, if they can't help you solve it themselves. And so I actually don't think it's bad to just start there and make sure that you have a core understanding of what have been some of the other pitfalls these founders have seen, and potentially can help you think through that, because you're walking into weeds at that point, and it is valuable to have someone with the industry side.
I agree with Richard and Derek. Especially in a community like Capital Factory, it is easy to find those other founders to talk to. We've ourselves have had clients that didn't necessarily shop around for those professional services and went straight to the big name because they thought that's what they needed to do. And we get to see the books and how much thousands of dollars they could have saved if they had found someone that's not going to be just the big name, but someone that can focus on them and their specific needs. But there are startup attorneys out there that are willing to help, not just you get set up as an entity, but even beyond that with your operations. I won't plug anybody, but if you want to hit me up outside of this on LinkedIn, I can send a couple of recommendations to anyone that's interested.
Excellent. Okay, well, thank you. Follow-up question, and this is just for the group, I think. What is your take on patents versus open source? This particular participant would prefer to have open source, but retain core IP. I'm not sure what that means, but what are your thoughts generally on patents and open source?
I mean, I'll just say anything that you can have to retain IP that's defensible is always going to be important. There's certainly a strategy of using open source to be able to get some excitement in whatever community that you're in, to help you build and mature whatever you're trying to go after. But if someone wants to invest in something down the road, they're going to want to make sure they own something that's going to be worth the money. So if you're giving it away, you're creating some challenges. And I know there are legal and license sort of vehicles that can help you navigate that to a certain extent, but it's certainly something that you need to look pretty hard and heavy at.
Yeah, I don't think there's one size fits all. I mean, it's hard to know without the more specifics of the business. There are plenty of businesses that have done quite well with open sourcing hardware, for instance, and going for a subscription service model with the software that actually operates and underlies that hardware. I mean, that is an option. I mean, I just don't know, right? Because it really depends on what your go-to-market strategy is and how you're going to create a serviceable model that people will eventually deploy, right? There are typically areas where open source makes sense in cases where you are trying to create some encouragement for adoption, right? Those are the types of situations we're typically looking at. And those businesses can be quite lucrative, but they're very specific to the company there.
Yeah, that's true. And at least from my practice and perspective, open source, again, really works on certain models, but it does come with some restrictions. You've got the underlying licenses that does restrict ownership and development going forward. And so, from an IP portfolio standpoint, it's important that the startups understand what those limitations are, because you have to factor that into your roadmap and your business model. And for patents, patents are tremendous, but they're very costly and they can take some time as well. And so you need to factor that in terms of what the risk reward there is. Christy, in terms of patents and open source, do you have thoughts on that from your perspective?
I mean, from an accounting standpoint, having a patent always looks better on your balance sheet because it shows that you have an actual asset there, which investor is going to prefer to see.
In terms of open source, is that the opposite? If your product is based primarily on an open source model, would there be concerns from a financial standpoint, or how do you treat that typically?
No, I mean, like Derek and Richard said, it kind of comes down to your preference and what works best for your business model. The only thing I can say is it's hard to show an open source as an asset other than what you initially put into it to create it. Then we can show that as an asset. But the patent tends to, bring more weight to it when it comes to the balance sheet. But again, I wouldn't let that be the deciding factor on the direction you go.
Yeah, interesting. So we have another question for the group. It's, do any of you have experience with Mike Moyer's slicing pie approach to structuring a company in early stages?
I do not.
Nor do I.
Yeah.
No, sorry, Alison. Yeah, I'm gonna look that up though now. So
I mean,
we got to follow up. So in terms of just closing out, we've got a few more minutes, but I just wanted to kind of give each of you a moment to kind of close out with some remarks around general best practices, right? And I know that's a broad sweep, but in terms of particularly the cap table and what we've discussed, and just early positioning, right? Not necessarily only for fundraising, but also to Jujube's point around operational establishment and scaling. Richard, why don't we start with you?
Sure. I mean, I think if we've gotten anything out of this panel, it's you should try to tackle these questions as early as you can, and you should think about the future, not just the present, right? And so as long as you're doing both those things, I think you're probably heading in the right track, and ensuring that, in making those decisions, you're bringing on the right types of voices to help you think through who you need to be engaging when, and thinking about how it's going to structure into your financial resources and to the resources of the company, knowing that it sometimes does pay to invest early. I do think it's kind of really easy not to invest early in some of this stuff, and it can come in and hurt you in ways that you potentially didn't imagine down the road. And so, spending some time to just figure out those kind of thornier situations earlier on, and smooth out your process, and ensure you have the right people supporting you at the right times. That's what you really want.
Christy, what do you suggest?
Like Richard said, starting early on, if you start from the beginning, it just makes it so much smoother the whole way through. Like I said before, no one starts a business to become an accountant. Nobody wants to do their own accounting. And, to some extent, I agree, you shouldn't have to. But if you're, trying to bootstrap or be conservative with your funds, I think doing it yourself early on, taking 30 minutes to an hour, depending on how much transactions you have in a month, putting it on your calendar, just taking that time, it will make your life so much more stress-free. And then on top of it, you'll be able to see where you stand cash-wise, so that you're not overspending. Because a lot of times people like to close their eyes, and if it's not there, I don't see it. And then all of a sudden it's like, oh no, I have to go do something about that quickly. And it's not always quick to be able to do something about it. So I think it's just important to keep up with it monthly would be my recommendation.
Great. And Derek?
Yeah, I mean, I think planning for success is really important. So making sure that you have cash on hand to make sure that, in the event you wake up in the morning and, your idea has gone viral and you need to figure out how to manage that, or, we always want those problems, or you making sure you're having the right people, helping you within the business, and you've understood, in the event of a tie, how are ties managed? Like there's so many opportunities once things start going really well. So it was amazing how people that got along super well while everyone was in their garage building something, and the moment you have some money, decisions need to be made, and all of a sudden you hate each other. So making sure all those things are tackled from a legal perspective before you even start. It may seem difficult and a lot of extra work, but it pays off so much better down the road. So many horror stories I have.
We'll have a follow-up. So preparation and housekeeping, two main things, right? Okay, well, hey, great panel. Thank you very much. We've had a lot of engagement, and I think that we're coming to the end. So thank you all. Really appreciate it, and have a good day.
Yeah, thanks, Ryan.
Awesome. Well, I hope you guys don't go too far. We have networking coming up. You guys are welcome to stick around. And for our attendees, hop into your hop-in networking booth here in just a minute. I just have to say, I thought that panel was awesome, and I would love to bring all of you guys on board as my advisors for my next startup, which is totally in stealth mode, going to make you sign an NDA, but I'm definitely going to Carpenter Wellington to get all of my legal advice. So just a reminder, at 12 p.m. Today, Carpenter Wellington will be having their hop-in booth so that you can come in and ask any questions that they didn't get a chance to jump into during the panel discussion. You guys had lots of great questions, and they are going to be available for you from 12 to 1 to do that. But right now, it's time for networking. So click on the link inside of Hop In and hop over to meet some of your fellow attendees. See you back here in just a bit.